in this sort of exponential asset, which parabolic asset, you could call it, that's risen so dramatically over the years. It's the only way to really contextualize these on-chain data points.
Right. You can see the market cap adjustment, for example, during the 2021 bull market really flattens out when you market cap adjust.
Yeah. It was still significantly high on the market cap basis, and you can see that it looked more familiar than the sort of 2017 cycle. So it's as much as sort of an art than it is a science, but you look for the spikes really more than anything, the real extremes, to give you some sort of like indicator. Now, looking at the pullbacks, at the moment, I think the current pullback, Ash, from the high in January is about 17%, but I think it pulled back maybe more than that, so 22% in the last week or so. And you can see on the far right that this cycle, the 2023, now 2024 cycle, the pullbacks have been fairly shallow. And that's a little bit unusual because usually we've seen pullbacks of 30 to 50%, and they may still come. I guess the important thing just to highlight here is that pullbacks naturally occur in bull markets. So what we're seeing currently is nothing too untoward, especially when you consider that, the derivatives market was pointing to really an extreme in positioning and extreme in leverage that inevitably has to get washed out.
The interesting thing about this chart, big picture, when you look at it, is you obviously see this period of 5 cycles here, at least the first 4 repeating in relatively similar fashion. But what's interesting is, even though these are really intensely exponential curves or hyperbolic curves, they do seem to be flattening over time, right? So the 4th cycle is considerably flatter than the first cycle.
Yeah, and for my price targets, I've taken that into consideration as well. I believe that the cycles will moderate over time. There's arguments for why that may not occur, given the different, the market structure changes with every single cycle, and it's really unclear what's going to happen in the cycle because you've got, I guess, pull and push factors which push it towards like, an exponential or a parabolic move this cycle, and then other factors which I think will dampen it. So we can talk about that. Like, we've got all this potential for sovereign adoption, for ESG or sustainable investment flows to move into the market and, become participants in the Bitcoin network. But you've also got now the availability of products like the ETFs and the options and derivatives that will be listed around them, as well as sort of regulation of derivatives markets that will bring in private client advisors, the guys and the hedge funds that do a lot of option selling or volatility selling, which will inevitably dampen the overall volatility and therefore the profit potential of the asset.